Hi everybody, Daniel Kircher here, and welcome to our very special evening for Doma Direct. Joining me tonight, of course, is Arthur Namides, who is the CEO and founder of DomaCom. So we're very excited to have you tonight with us, Arthur. Thank you for coming.
Thank you for having us, Daniel.
Absolutely, of course. Now, tonight, before we get going, we just have to run through our usual disclaimer. So let me just quickly share that with you, of course. Also, I know many of you have probably watched my webinars before, but just if this is the first time you're watching, down the bottom right-hand corner of your screen, so come out of the video, and you'll see to the bottom right-hand corner, you'll see a little help button there. If you click on that, up will come a help window, and you can type in a question, or as many questions as you like, and submit those to us. So we're going to have a talk tonight, talk about DomaCom, the future of the business, how it all got started, Arthur's vision, all that sort of stuff. But also, I'd like to have a question and answer session. So if you have any questions you'd like to pose specifically to Arthur or potentially me, by all means, please type in the questions, and we'll be sure to answer as many as we can tonight. Okay. Now, information you're hearing in tonight's presentation is, of course, general information. It's not individual specific advice. Furthermore, we haven't taken into consideration your personal financial objectives. Trading involves risk. Past returns do not mean we'll make the same in the future. And finally, Trading Pursuits Group, Trading Pursuits and Doma Direct, Doma Direct Australian Proprietary Limited are authorized representatives of the Trading Pursuits Group, which holds an Australian financial services license. Okay, got through that one. Okay, you think I'd know it by now. I've said it a million times. Fantastic. So, joining me, of course, is Arthur Namides. Now, I met Arthur back in September last year, right?
Yes,
September last year, which was the first time I was introduced to Arthur, first heard about DomaCom and what Arthur was doing with DomaCom. And instantly, I was absolutely blown away, and I could absolutely see the potential in the marketplace. So I very quickly put my hand up and said, Arthur, I really want to work with you guys. What you're doing is groundbreaking, it's revolutionary, it's fantastic. It's going to change the lives of literally countless number of people, not just in here in Australia, but internationally. And so we discussed it for a couple of months, and we eventually formed Doma Direct, which, as you guys know now, is like we're an authorized representative of DomaCom, so that we're licensed with an ASIC license. We also hold a real estate license.
You're actually an accredited user.
That's right. So we're an accredited user. Those are the words I'm trying to find. Thank you. Yes. We're an accredited user of the DomaCom platform, and we connect individuals, the public, investors, with fractional property in units in the property managed fund through DomaCom. So it's a very important relationship. Members of the public can't go directly to DomaCom to purchase units in the property sub-funds. They've got to go through an accredited user such as Doma Direct, and we perform that service. But tonight, it's not so much about Doma Direct. Tonight, it's all about DomaCom. And so let me just quickly give you an outline of Arthur's background. Please feel free to share and embellish this. But Arthur has, he's been quite a standout in the Australian IT and financial worlds with a variety of different achievements, as you'll see. Over 20 years as an IT consultant, then spent 5 years in major banks here in Australia, investment houses, working on the technology and the information administration systems. Then took that knowledge and experience and formed Praemium, which he then listed on the Australian Stock Exchange. Praemium, as you can see, provides client administration software to over 500 different firms, stockbrokers, financial planners, accountants, and collectively those groups are administering over $43 billion worth of assets. And then took and expanded Praemium up to the UK market. So an enormous amount of experience in IT, in the financial markets, and in corporate growth and business in listing his previous business. So I guess you saw the opportunity. Maybe you could tell us how you came about the idea of DomaCom and where this has led you to today.
Yes, Daniel. Really, DomaCom, I left Praemium just over 4 years ago, and after a couple of months, holiday, I'm obviously running a listed company for 5-6 years, was quite a busy time. I was in holidays in Club Med in Malaysia, and I thought, well, it's time to do something else. So I looked back at my time at Praemium and focused particularly out of the 44,000 portfolios being reported on, 18,000 were self-managed super funds. And what I was looking for was a problem that needed a solution. And the problem that I saw was that focusing just on the self-managed super funds, 90% of them had zero weighting to real property, and about 10% had nearly 100% weighting to real property, symptomatic of the problem with property, which is large transaction size relative to most portfolios. And so that was the headline problem. The other problem really related to what was well known in the markets, FOFA, future financial advice. So basically what that was doing was going to force the whole financial planning industry to become fee-based. So that was the second driver, in that what I set out to do was take this lumpy asset, divide it into bite-sized chunks, but to do so in a regulatory structure that could be used by the advice industry, which meant that it had to be a registered managed investment scheme. And that was the journey for 4 years ago, and it took us quite a few years to go through the hurdles.
Nobody had ever done anything like that, not just in Australia, but globally. Is that correct?
I'm not aware of anyone who's created the equivalent of a registered managed investment scheme with all the permissions that we have, which include secondary market permissions. Because effectively, the way you could look at what we've done with Domacom is to take equity concepts and apply them to property. Everything from the book build to the secondary market to the rights issue, everything that's embedded within Domacom has really come from the equity market. So whilst they're new in the property world, actually have been around for hundreds of years. We've just had to use a different legal structure.
Right. So they've been around, as you say, hundreds of years when it comes to companies. You can buy fractions of companies. Now you're applying that concept to fractions of property, of real estate.
Yes.
All right. Well, let's. As we all know, right? Of course, Australians love property. I'll just switch to the slide here. Australians love property. They love stocks. They love real estate. And we know that stock market has performed pretty much in line with the property market over the last 100 years, albeit the stock market's been one heck of a bumpy ride.
Yes.
It's a much more bumpy ride. So, I mean, Australians, prefer, I think, property as an investment tool for the majority of people. And I think if you look at the greatest, wealthiest people in Australia, they've made their money primarily out of mining or real estate. Those are the two main drivers for wealth. Now, of course, there's other wealthy people in Australia from business, but if you look at the BRW richest people over the last decade or 20 years or so, real estate and mining have been the two main drivers for wealth building. And there's no question, we all know the real estate market in Australia has been booming, particularly here in Sydney, also in Melbourne. And in Perth and Brisbane, haven't yet quite seen the gains that we've seen in Sydney and Melbourne, but have certainly doubled in value over the last 10 years or so. And this is a constant theme that we're seeing. I mean, Sydney's up over 60% in the last 10 years alone. Now, Arthur, Domacom has been incredibly popular, so to speak, and quite visible in the media. Maybe you can talk about this. Was the Fin Review, this particular article, if you want to talk us about.
Yeah. This was after a couple of presentations I did with the Property Council of Australia, both Melbourne and Sydney, and they had me up there with a couple of crowdfunders, and it really brought to light that what we're really doing is actually happening on a global basis. There's a global theme of digital disruption. It's happening in a lot of other areas, but it's also happening in real estate. And it's really funny. At the same time, we set up Domacom for our own reasons in 2011 was when the first crowdfunders for property started in the US. There's, I think, Realty Mogul, Realty Shares, and Fundrise, etc. And they started in 2011. They've chosen a very simple legal structure to go with, so they were operating within 1 year. And in 2012, they did $20 million worth of transactions. Wow. Last year, they did $1 billion, and this year they're heading towards $2.5 billion. Wow. So
that's a fractional property strategy concept in the United States.
In the United States and Europe. And the difference is, the people say, well, what's taken you so long? Well, the reason why is that we've created a legal structure that took us 3 extra years to go through. But what it means now is that we're fully authorised to go retail. None of them are.
That's right. So just to be clear, and this is the really, really important point, is that all these other structures around the world, and we even have some crowdfunding strategies here in Australia, they're not allowed to distribute or involve retail clients. So that is clients with less than, as per the Australian qualifications, clients with less than $2.5 million worth of net assets or an income less than $250,000 for the past 2 years.
Yeah, that's definitely the case in Australia. As of about a week ago, the US has introduced what's called Phase 3 of their Jobs Act, which allows a limited amount of retail participation, but it's quite stringent. Like the Australian ones, I think you're allowed to put $10,000 in any one crowdfunding per year, and maximum $25,000 a year. So it's a very different structure, right. But also financial advising firms can't use them because they're all proprietary limited companies.
Right. But yeah, they're not a structure where they have a secondary market like you've established. They don't have...
Well, not just a secondary market, it's the regulatory structure that the financial advisor firms, including yourself, can actually allow clients to access within the structure of a professional indemnity insurance, and there's a whole lot of oversight on,
right.
Because we're a financial product.
Right. So for people who are new to these sort of terminologies, essentially what you're saying is the structure that you have created is far... There's a lot more protection for investors. Would that be fair to say?
Well,
like you've got regulation, you've got...
it comes from the fact that we've got responsible entities, we've got custodians, we've got ourselves. All of us have to have PI insurers, the advisors, yourself. We all have to operate within certain guidelines, and within that come all the protections. Like, for example, in our case, regardless of who selects the property, Domicom does its own independent due diligence process, which is what we're required to do to make sure that the property is where it says it is, and it's in the condition we think it is, and the valuation is reasonable.
Right. So I guess the end result is there's a lot of this crowdfunding going on overseas. It's becoming a multi-billion-dollar industry at the moment. It's now started here in Australia. But it only takes one of these crowdfunders to blow up or to cause problems, and the whole industry can get tainted. Whereas with Domicom, you've gone through all the efforts, jumped through all the hoops in order to have the regulation, the licensing, the responsible entity, the protections for investors to ensure that regardless of whatever happens in the future, Domicom and its associated authorized representatives like us have the most regulated product in the marketplace.
Well, yeah, it's the highest level of regulation because we're what's called a registered managed investment scheme, which means, and that word registered is what makes us being able to be used by retail investors. Now, the question some people have is that, why are we not dealing direct with consumers? And the reason why is that we're a wholesaler, and our whole business model and pricing is not set up to deal with the end investor.
Sure.
So that's why we need intermediaries like yourself.
Like direct, that's right.
Because your job and your expertise is dealing with investors, whereas ours is operating a platform.
Yeah, the technology aspect side of things and the administration. Yes. Excellent. Okay, so I'll take you quickly through. You can see some of the different articles. I better show you some of the different articles that you can check this up yourselves. Just type in Domicom into Google, and you'll go through. You'll see a lot of different articles. One here I saw was that you've opened up an office in Singapore. Maybe tell us a little bit about your plans to expand.
So in Singapore, we've set up a little office to act as a distribution sales office for the Australian fund. So in the near term,
Singaporeans can buy
Australian properties.
Investments in. We have to be careful because they're not buying the property, are they? They're
they can invest in Australian property assets.
That's right.
Yes, but eventually, obviously, the Australian fund will be able to buy global assets. So there's no restrictions on us with just buying Australian properties, other than we're just managing the process of launch. So we just launch with Australian properties, and then we'll have global properties. Initially, we'll have Singaporeans just access our fund, but clearly, in the long term, there probably will be a Singapore domiciled version of Domicom.
Right.
And clearly this model that we have in Domicom works anywhere where managed funds work, which is pretty much anywhere.
Everywhere. Sure. Yeah. So, I mean, the sky is really the limit, isn't it? I mean, to take the regulation and to take the protections that you've built in Domicom, which are superior to the other crowdfunding strategies internationally, you could expand, as you say, to Singapore, to other markets, and allow... I can imagine Singaporeans, having done a lot of business in Singapore in the past, I know they have a huge love affair with Australia, and particularly Australian property. So to be able to have a diversified approach to an exposure to Australian property would be massively popular up in Singapore.
Now the way to view it though, because obviously some people say, oh, you're selling more of Australian properties to overseas people, but actually it's not. It's just another way of funding properties, because where do banks get most of the money they lend to people? They get it from offshore. So this is just another way of funding residential and commercial investment property. In other words, properties for rent.
And I think too, that's a good point you mentioned, that some people find get upset because I think, oh, we're selling properties overseas and foreigners are buying Australia. It's a global world, right? Either you have to be a part of the strategy or not. But to sit on the sidelines and complain about it, fine, but you're missing out on the opportunity that's going on all around us. There's nothing stopping Australians from going overseas. I have property overseas. So there's nothing to stop us from buying overseas properties, nothing to stop foreigners from buying Australian properties. It's a globalized world today.
Well, the thing to remember, though, the property is always owned by an Australian entity.
Well, that's true, too. The property actually, you're quite right. The ownership remains in Australia.
Yes.
They're buying units in the managed fund that give them the beneficial interest in the property in terms of getting the rental income and capital gains should it happen. This is another article. Again, real estate fintech, that's you guys, turn property into shares. So it's, again, it's that same concept of taking the real estate, saying the stock market concept, applying it to real estate. This was an article just in last week's Herald Sun. Talking about how this is so, I guess, it's very exciting. We're at the ground floor of this groundbreaking new industry. And I wanted to share, this information with you guys tonight so that you can appreciate just exactly what's going on and how the groundswell for Domacom is growing. Also wanted to point out, of course, the currency. Now, those of you who are my Trading Pursuit clients certainly are familiar with the direction of the Australian dollar currency at the moment. And we're now down to 71, so we're a hair's breadth away from being in the 60s. And certainly if we start seeing interest rates in America go up, which is likely to happen in the next 6 to 12 months, we'll very likely see the Aussie dollar down in the 60-cent range, potentially even down in the 50-cent range. So it's certainly very, very attractive for international investors to be coming into Australia to gain exposure to property assets. So I think Doma Direct and Domacom are going to have a very bright future with international investors, but also those of us here. Yeah, look,
I think one thing that's special about property is that there are demographic drivers, not just the currency drivers that you're just exploring here. There's an extra 100,000 people needing a home, and that's why when people constantly talk about the demise of property, and I've seen some forecasts for the last 10, 15 years say it, well, people always need somewhere to live. Unlike equities, I remember when I first started JB Weir, one of the old stockbrokers, basically, there's a strategy of buying blue chip and sticking it in the drawer, and he said, Arthur, stocks change colour. In other words, what's a blue chip one day ceases to exist. Obviously, Pasminco, HRH here, and you've got Kodak and Nokia. There's a whole host of them. So, whereas I've yet to find a property that's evaporated.
Yeah, or has turned sour completely. It only tends to get better as the city grows out around it. We can see here, you're adding to the property mix. I want to show you this one. This is from the ABS, right? Australian Bureau of Statistics. And the population is projected to double in Australia over the next 50, 60 years. So, already we're at 23 odd million. That's 45, 46 million people living in Australia within the next 50 years. So, and where are those people going to go? They're not, unlike America, where 45% of the population live in regional towns. Here, 86% of the population in Australia live in the urban centers. They live in typically the 5 or 6 major cities and some of the regional cities around the country. So, demand for Sydney, for Brisbane, for Melbourne, for Perth, for Adelaide, the demand is only going to increase. The level of density of housing, high-rise units, 3-story walk-up units, that's only increasing because there's distinct advantages for people living in an urbanized environment in terms of access to jobs, access to transport, education, food, shopping, etc. So that's only going to increase. We're not going to spread out unlike America did and take over vast areas of the Midwest, and because our Midwest is a desert. We have to be close to our borders, our oceans. So it's it's going to be very concentrated, the growth. So I think Domacom has come at an amazing time, right when approximately 92% of the population in Australia do not own investment property, and they're concerned about prices going higher. The population is growing, and our dollar's down. It's only pointing to one direction, isn't it? It's
funny about this statistic about the 92%. It's very similar to the 90% statistic that I saw in when I was at Praemium. The 90% of SMSFs don't have.
90% of SMSF, self-managed super funds, do not have direct exposure to real estate.
That's the ones that I had out of the 18,000 super funds we had on our platform. So, and that's clearly the underlying, short-term business model of Domacom is that, there is a nearly $600 billion market that is, that likes property. And SMSFs like equities, they like cash, and I tell you, they like property.
Absolutely, and it's interesting. We can say, there's a $600 billion. When you just think of when you stop and put in context the amount of money we're talking about, I've mentioned before on my webinars that already self-managed super funds in Australia have approximately $180 billion sitting in the bank right now, just earning 2% interest. If even 20, 30, 40 billion dollars of that were to come into real estate through a fractional system like Domicom, that's a massive amount of property being purchased. When approximately $250 billion worth of property every year turns over in Australia, 30, 40, 50 billion, that's a significant increase. And again,
but that's within the realm of the asset allocation. So,
yes, but it's going to create an impact on property prices. It's going to have an impact, and that's what I say. It's not a question of whether this is going to be successful or not. I think it's already demonstrated internationally. It's demonstrated here in Australia. It's a question of how quickly people recognize it, and those who decide to take advantage of it sooner rather than later in order to be a part of this growing, particularly those people who don't have any property investments or any exposure to real estate asset classes in any shape or form. Now this gives them the chance to participate and be a part of what's going on.
But also it allows them to do something that up until now, even the people who own property haven't been able to do, and that is diversify. Because if for those people who do buy a property, they'll buy one. They'll leverage up, they'll buy one. There's concentration risk, there's a credit risk and all of that. You'd never do that in any other asset class. Would you put all of your equity holding into one stock, BHP? You'd never. So what are you doing property? Oh, because that was the only way. No longer now. So even now in our case, with 50,000, you could put, 5 properties in there, so with $50,000, and you get some from Melbourne, some Sydney, some Brisbane, so what's the chance of all of them being untenanted at once? Very slim.
Yeah, exactly. So Arthur, tell us a bit more about your vision for Domicom going forward now. What's your plans? Do you have views of the business? Where do you see the business in a year from now?
Well, clearly, one of the things, so when I left Praemium, I thought, what was I going to do next? But now I look back on it and think, thank God I left, because this is such a fantastic opportunity. And really our belief, my belief, is someone's going to create the property platform of Australia, and they're going to use the legal structures that we've pioneered, because that worked end to end. The whole scheme, the secondary market, everything works. We've got 5.5%. The financial advisor market have already put us on their approved product list, which is not bad for a standing startup. From a startup, in less than a year. So what we believe is that we want to be the property platform of Australia, and it's through clients such as yourself that we're going to distribute out. And clearly part of that is going to be answering some the funding questions and the like, which is the elephant in the room that we talk about.
I think I know I certainly have had questions from our clients, Doma Direct clients, saying, how do I know Domicom? What happens if Domicom goes out of business? Well, how do I know Domicom's still going to be around? What happens to the property then? What happens to my my units in the property subfund then? So I think that's a very important question to ask.
It's an obvious question, and there's several things. Firstly, we're really lucky in setting up the fund in the first place. We just don't have any custodian or responsibility entity. We have perpetual. It's a $3 billion balance sheet behind this. So
they're massive. They're like the biggest.
So they're the biggest RE for hire. Or trustee, and but that's not that's sort of nice. But the real concern for people is that what if you ran out of money next year? So clearly, to get where we are hasn't been cheap. It's cost us about $10 million to date for a brand new startup taking the risks that we have. I think we've done really well.
It took you years to get the ASIC license alone, which you had to actually get ASIC to create a new license class, didn't you?
Well, not quite. We had to give they had to give us certain what's called reliefs from the Corporations Act, and one of them we're not aware of anyone else having it. So they're exemptions to the or reliefs from the Corporations Act. Now the other area is really our own funding. So up until now, we've funded ourselves, obviously, with a few sophisticated investor raisings. We're just about finished another one for $10 million, so we're $8 million into it. So that'll give us enough fuel in the tank.
You've raised raised $8 million in cash for Domacom to continue operations.
So we've got commitments for $8 million, so it's coming, and we've got another 2 left, so we're very close to doing it, and that'll be enough funds really to keep us for at least for another 2 years. However, we know that for us to become the property platform of Australia, it's going to be more than that 10 million. We may take overs, and this is just restricted sophisticated investors only, but our strategy to become the property platform of Australia would require a lot more money than that. So my plan then would be at the appropriate stage to do a major raising on the ASX and
to publicly float the Domacom.
Or float it initially. We'll probably float it before we do the big raising because we obviously have enough shareholders now and the like. So the view is we'll do that sooner rather than later. But then probably, I can't say exact timing, but as soon as the conditions are right, we want to raise 40, 50 million so that we can have radio, TV, media, because we're talking about an asset class bigger than the ASX, and someone's going to create the ASX of property, and we want to be that someone.
And you are, from my research anyway, you seem to be streets ahead of anybody else in Australia, and certainly maybe even America, in terms of being a business that has all the ticks. All the boxes ticked in terms of regulation, in terms of the RE, in terms of the licensing. So, would you say that would you agree? Would you say that you guys are the leading horses right now?
The reason why, when you look at all the other players, like there's 115 property crowdfunding sites in the US now. 115. 15, whereas 5 years ago there was none. All right, so we're talking something that's
that's right.
And out of all of them, I'm not aware of anyone that's come to it. They're all either techie people or they're property people. We're financial services people, platform people. So like what we built with Praemium, that was 500 firms with 45,000 portfolios with $44 billion being reported. That's our background, creating fund and legal structures. So we've come at Domacom in property crowdfunding in a totally different way than everyone else has. But I'm pretty sure, and in fact I know that there are people trying to copy our structure now, and that's fine, because as someone told me years ago, if you don't have a competitor, there's something wrong with your business model. It's not attractive enough. And now we're going to have lots, but we've got a first mover advantage. We've got 34 firms who like us enough to be starting to use us.
Sure. Okay. So you do expect then to be in the future. To be a publicly listed company,
yes,
Domacom.
Of course.
Yeah. So that's an opportunity potentially for investors to be involved in Domacom as an investment when it goes public.
Well, I can just on that matter. When we listed Praemium, it's my firm belief that you reward clients. So what we did there was gave our clients a priority in the retail float. So clearly, I would expect to do something similar here.
Okay, so just be clear on that then. So that means that anyone who was a client of Domacom, i.e. through Doma Direct, and has bought units in a property sub-fund, like we're promoting at the moment, they would be given, you would expect them to be given priority that's when Domacom goes public.
Clearly, that's what we did at Praemium, and that's clearly my intention at the moment would be to instead of passing any retail stock to strangers, to give first dibs to our clients.
Great, fantastic. So that's a bit of an added benefit for being a Doma Direct, Domacom investor, is potentially having a priority opportunity when the company goes public.
Well, clearly that's simply just a reward for being an early supporter.
Yep, sure. Okay. Well, let's now if you guys have any further questions, of course you can contact us. By visiting the website, domadirect.com, or info@domadirect.com, or of course you can call us at these phone numbers. That's after tonight, but since we're live right now with Arthur, let's see if we have any questions from the audience that we can ask Arthur. So if you've got questions, now is a fantastic time to ask away. Oh, yep, I see we have a few questions coming through. Here's a question from Kim Henderson. Arthur, is the secondary market available now for us to view? Who has access to this secondary market? The PDS says we can only sell our trust units back to Doma Direct when and if they decide to buy and at a price they deem fit, or when the property sells. So can you please expand upon the secondary market?
Okay. Firstly, the secondary market is live and operational. We've had a few secondary market trades already. The only thing at the moment is that the technology that the current secondary market is operating is in a different form of the website than Doma Direct has.
Right.
And so we're in the process of transitioning the secondary market technology into your version of the platform.
Right.
So it's live and exists, and it's very much like the market depth screen, bid offer and depth. So we are our AFSL gives us what we call market maker permissions, and so we can make a market in our instrument. And the way we make it is effectively we buy off a vendor and sell to a purchaser. So when we say we can't guarantee to buy someone's units, because we will only offer to buy someone's units if we ourselves have a matching offer to buy from us. So effectively, we match buy and sell, and we buy from the vendor and we sell to the purchaser, and we charge each side a nominal transaction fee of 0.025% is what we charge.
Yeah, just to be clear, 0.025%, which is
2.5 basis points.
Yeah, it's tiny. It's a couple of dollars on a $1,000 investment.
So basically,
just to be clear on that too, right? As we disclosed with Doma Direct, when you purchased units through Doma Direct, when you do on sell your units through the secondary market, there is a 2.5% charge of the value of the asset that you're
that's for Doma Direct.
That's Doma Direct. So think of Doma Direct like real estate agents, and this question's come up a number of times before, so I want to be clear as well. We don't charge purchasers. So purchasers who come through to purchase units in the DomaCom fund and the various property subfunds, Doma Direct, we don't charge a fee for that. You come straight through. We do have a company within the Doma Direct group called Doma Direct Realty, which holds a real estate license, and we have listed property from developers and people who want to sell their property that they pay us a standard real estate commission. So we're like real estate agents. We get paid when the property sells. So for you, those of you who purchase units coming through Doma Direct, there's no charge to you up front. We don't charge a transactional fee when you purchase. But when you then in the future decide to sell, there's a 2.5% charge that gets charged to you on the value. So if you sold $1,000 worth of units, it would be a $25 charge, right? Now, your charge is 0.25%, is that right?
0.025.
0.025%. Yes. So it's 100th of what we charge. Yes. So on $1,000 where we charge $25, you're charging $2.50.
Yes.
So it's almost negligible, right? It's
25 cents.
25 cents. Yes. On $1,000 transaction, yes. You charge 25 cents. Well, you're not going to get rich on that one, are you?
No. Our business model is very clear. We're a fund manager, and so we charge 0.8% of the value of the assets every year, and that's our business.
Right, and that of the charge per year. We've talked about that before too with you guys. That per year there's a 0.8% of the value of the property charge for the administration of the fund. That's what DomaCom charges. We don't get, Doma Direct doesn't make anything out of that at all. So we only, Doma Direct, make money when the properties are transacted. So while you own the units in the property sub-fund, DomaCom has a fee, which is paid typically out of the rental income. So it does reduce the rental income, we've gone through this before, by about 0.8% per year. So if the rental yield is about, say, 5% per year, take off 0.8, so it would be 4.2%, actually be 4.12 because it's with GST, right? 0.88 after GST. So that's a payment per year. That's where DomaCom makes their money, is on the yearly ownership of the properties in the property subfund. Doma Direct, we're a transactional business. So we make money when when developers or vendors sell their property to the fractional system, or when investors decide to sell their units on the secondary market.
Yeah, this is very similar to what happens on the ASX, right? The ASX charges, now they charge transactionally, whereas we charge a fee for service, what's called managed expense ratio. Now, we're not actually, this is one of the benefits of FOFO, we can't pay you any money ever.
That's right, you never pay us a dollar.
And that's fine. But like the ASX, they have brokers. So the way investors access the ASX is they go through brokers, and the brokers charge, and they all charge differently. Some charge, flat dollars. Some charge, a percentage on everything. Some charge an annual fee and nothing. So, and that's what we're finding. We've got lots of different clients. You're unique in that your model is effectively like an online real estate. In fact, you're a crowdfunder.
Sure.
In a
Well,
true
we're not.
sense.
The difference with Doma Direct is we don't charge an upfront fee. There are other Doma.com, authorized advisors who charge a fee up front to then give advice as to what properties to their clients to then purchase. We don't charge you a fee at all. So we only make money, Doma Direct, when you choose to sell your units in the future, or we make money from the developer or vendor of the property who wants to sell their property into the Domacom platform, and then we introduce investors in the units. So as investors, we don't make money from you guys until you choose to sell, and that could be 5, 10, 20 years from now. But we're happy to provide the service now to connect you to the Domacom platform, because we just feel so confident that this is going to revolutionize real estate. And so just to finish off this question, Arthur, just to be clear too, the secondary market, as you say, is now available. As you said, the Doma Direct platform, we haven't yet got it on our system, but we're brand new. We're still getting the first property portfolio through the gate.
The reason why is that the version of the Domacom platform that we've built for Doma Direct is different, because your model's different. And so you've effectively got what we call version 3 of our platform. So not all functions of Domacom have been migrated to version 3. So obviously the next one the next cab off the rank is the secondary market. Now, it wasn't top priority because you're just going live now. We thought, well, you're not going to need the secondary trades, straight away. But it will be happening in the next couple of months.
Yeah. So I was going to ask you for a time frame. You think within the next few months?
Yes.
Yeah. Okay, great. Let's go to. I hope that answered your question, Kim. Let's go to the next question. Okay, here we go. That's a question regarding trading pursuits. So. Okay, so Craig is asking, what is the average return on investment per annum? Craig, so on the Doma Direct website, I won't go to it now, but on the Doma Direct website, there is it's very clear. You can find the different properties. So at the moment, we have one property portfolio that's on offer. That in that property portfolio, there are 3 different properties the minimum investment is $6,500, and that splits $2,000 approximately into 3 of the different the properties. So you end up with about $6,500 worth of units in the different portfolios. All right, don't forget that $500 approximately is used for the purchase transaction costs, stamp duties, etc. The returns, the indicative yields, the outgoings, the expenses, and the net yields, that's all explained on the Doma Direct website. And so just to be clear on that, right? Remember, these aren't stocks like company stocks that you trade through the stock market, where the share prices can be very, very volatile. What Domacom has done, of course, is taken residential real estate, or any type of real estate, but we're doing residential real estate to start with, and essentially split them up like shares, where you're buying units in a fund that holds the property. But the property value, it's real estate. The property value is not going to be wildly volatile like it is on the stock market. So
we value every property every year.
Once a year, yeah.
Once a year. And but to go back on the secondary market, whilst we value the property every year, so nominally a property is maybe worth $900,000, the buyer and the seller can agree a different price. So if a seller is willing to sell at effectively $910,000, as a buyer willing to pay that, then so be it. So it's just like a market in the normal sense.
Yeah, I mean, I've mentioned this in the last few videos as well. This is a common question. So let's say, just giving another example. So you were come in and purchase the current property portfolio that's available through Doma Direct at the moment, and let's say 10 years from now, the property prices have doubled, just for sake of argument. Then the value of your units, the valuation that's done on a yearly basis, would reflect that increase in value. And so now your units would be worth, say, $2 each per unit that you have. But that doesn't mean you have to sell them at $2, right? That's just the independent valuation, right, which becomes the unit price for those units. But you might choose to put your units onto the secondary market and say, look, I want to ask for $2.50. I know their valuation was at $2, but I want $2.50. Well, if no one is going to pay you that much money, like in the stock market, you can put your shares on the market for $1,000 a share, but if it's ridiculously high, no one's going to pay you. So if you put your units on for $2.50, then somebody most likely they'll say, it's a bit too high. The valuation's at $2. Yeah, but somebody might think, well, yeah, but the market's hot right now. The valuation was done 6 months ago. I really like that property. I want to get into it. I'll offer you $2.30. Right? So the secondary market will quickly recognize that the valuation, again, it's an independent valuation. Valuers are notoriously conservative. And the market generally recognizes that the prices of real estate generally trades higher than the independent valuations. And so just be clear, you don't have to sell your units in the future at the independent valuation. You can choose to put them on the market at a higher price, and if there's a willing buyer there to pay you that, the transaction occurs, right? So we get questions like this of what's the average rate of return? The average rate of return will be the rate of return of the real estate, right? So you're getting an income, right, which is clearly explained on the Doma Direct website, the net rental yield, right? And there's a capital gain component. So in the future, if the value of the property goes up, the independent valuation recognizes that, the unit price goes up, and then you can choose to put your units on the market for sale at a premium to the unit price.
One thing that clearly you get some property fund managers, particularly commercial property fund managers, sort of saying, "Well, why would anyone buy resi?" And the reason why they quote that is the yield may be 3%, right? But that's not why you invest. You don't invest in some of the stocks just because of the dividend yield, because you also get capital growth.
That's right.
And so the total return on investment on anything is the income yield plus the capital growth. So yeah. Now there's an interesting. A couple of years ago, I got interviewed by a journalist from the Eureka Report, and at the end, he's 26, and at the end I said to him, we wrote a good article, and I said, now about you, do you own a property yet? And he goes, no, I'm only 26, but I'm saving up for one. And I said, oh, good for you. I said, where are you going to buy? And he's going to buy Carlton. And I said, well, I don't know where you're saving, but I know something about it. And he said, what? Well, it's not tracking Carlton. It's not tracking property at all. So where most people are saving,
incredibly important
where
point.
most people are saving for their deposit, are simply not tracking property. And
That's
so
right.
this is one of the things. And one of the things that I asked him, and it'll be interesting to see what happens, is that I said, roll forward 2 years. This was 2 years ago, and Domacom had some properties in Carlton. As it turns out, we do, right?
Yeah.
And I said, save us a $700,000 townhouse or property in Faraday Street, and it's nominally worth $700,000. Now, say if someone owned a percent of that in Domacom and wanted $7,500 for that 1%, would you buy it? And he said, yeah, it's only $500 more. In other words, sensitivity to price will be lower.
Yeah.
Or higher, lower sensitivity to price at smaller transactions. And I think that also stems from the fact that there's a lot more people who can buy a hundredth of a house. They can buy a whole house. And there's one thing we haven't mentioned is that we've registered the fund in Victoria, and the reason we've done that is no stamp duty on secondary trades.
This is something that I haven't talked about this one too much, a little bit in the last couple of weeks, but this is actually a very, very important point. I just want to, before we do that point, though, I just want to step back a second because you made another point too. This is something that I think is really, really vital for people to appreciate and understand. I know a lot of clients, maybe many of you watching tonight, who are saving to buy a property, right? If your money is in the bank and you're saving money in the bank with the aim to use that money in for a deposit on a property or to invest in real estate, then like you say, your money is not tracking the real estate market. You're getting 2% return, whatever interest. Yeah, but property values are rising 8, 9, 12% in suburbs around Australia right now. So one of the great things about this whole Doma Direct concept is that rather than having your cash in the bank, earning about 2% interest, you can have your money through Doma Direct in the Domacom platform, earning interest on the cash higher than the ANZ overnight rate, at about 0.8% higher than the overnight rate.
0.58.
0.58. Oh, that's after the Domacom fee. Yeah, 0.58 net to the investor. But also then you can then use that money to invest in units in a property subfund in the suburb, at least in real estate. Right? So therefore, if the property values are rising at 8, 9, 10, 12% per annum, then your money is tracking that. In addition to so you're still getting the same yield basically either from rent or from interest as you would be by having cash in the bank, but with the capital gain potential that's tracking investments, that's tracking real estate. So I think that's an incredibly important point. Now, your second point there was that, as Arthur just said, he structured Domacom in Victoria, the state of Victoria, because when you go to on-sell your units in the secondary market, the person buying the units off of you doesn't pay stamp duty because the property is not changing hands. The unit in the property subfund is changing hands, and there's no stamp duty on that, which frankly is a massive savings for an investor because it's stamp duty.
Once again, this is just like equities.
Stamp duty in Victoria for real estate is one of the highest levels of stamp duty in the country for real estate, and it's up around 4 to 5%. So I think this is going to be something really huge. Not yet, because the secondary market for Domicom is still in its infancy. It's still growing. But we come back 3, 4, 5, 6 years from now, once there's been a groundswell of people who have purchased property assets or units in property funds through Domicom, who then go to unsell their units in the secondary market. When investors recognize in the future that, hey, I could buy these secondhand units and and save basically 4 or 5% of the transaction costs, because there's no stamp duty to the government involved in this case, that's massive. I don't know if people truly understand just how. But imagine buying real estate today and not having to pay stamp duty on it. That saves on a $1 million property. That saves $40,000-$50,000. So it's a massive component that I think will make the secondary market incredibly popular in a few years' time, once people recognize that, hey, there's volume there, and they don't have to pay the stamp duty on acquiring units in the property fund.
I mean, look, what we expect is that there's some really strong drivers for particularly the Gen X, Gen Y cohort, and once they start hearing about us, because clearly no one outside of the financial services, financial planning, really know about Domicom yet.
It's still early days.
So what we're planning to do with some of the amount we're raising now is actually to do some concept advertising so that people will know about fractional property and they'll come to Doma Direct and our other clients. And you'll find there's going to be a lot of buyers for the secondary market. But one of the things that we haven't talked about, I think we should, is that as investors right now, you'd be concerned, you're saying, well, how do I know there will be a buyer for my units? And my first answer is that these units are hooked to a real asset with real yield at a price. There'll always be a buyer, right? But forget that, because from a liquidity perspective, there are three liquidity mechanisms in Domicom. The first is the secondary market that we described, but the second is every fund has a 5-year term. At the end of 5 years, you all vote, and it must be 100% to renew. Okay. However, if it's 99% to renew and 1% not to, well, then the 99% have 30 days to buy them at the market value using our secondary market. So what that means is that if I absolutely want to get out, I can in 5 years. And we've chosen 5 years because the other similar thing that we do is called syndication. And that's generally done by high net worths with their accountant. And a normal property syndicate is, 7 years long. And we've picked 5 because 5 is a good time for people to sit down and say, okay, do we want to keep it for another 5?
Yeah.
So that's the liquidity.
Just be clear on that, because that's a point too I think people may not quite understand. So what that means is every 5 years, Domicom puts a vote to the unit holders of that property sub-fund and says, do you want to continue owning, do you want the property to remain inside the property sub-fund, or do you want the property sold, right? And then everybody paid out their proportional amount. So every 5 years, the unit holders have to agree to say, yes, we want to keep the property in the sub-fund for another 5 years. If you don't get 100% voting yes to that, then as you say, if you might have 1 or 2 or 3 or 5% of people who say no, then you've got 30 days for the other investors to say, okay, we'll buy you out, right? And if that doesn't happen, you go to the rest of the Domicom platform.
So what it works is you have 14 days, 2 weeks for the existing unit holders. And if the existing unit holders don't buy them out after 14 days, you have another 14 days for
all Domicom.
All Domicom,
Right.
And then if at the end of the 30-day period, there are still some people wanting to get out, then that's a wind-up event. And all we do there is just put the property for sale in a real estate market. But at the same time, we do another book build to buy it in Domicom.
Right.
And the advantage there we see is that book build to buy it would have a 5% price advantage of the real world, because the real world buyer has to pay stamp duty.
Yeah,
This book build is effectively a block trade.
Yeah.
So basically they're the mechanism. There's a lot of
but also
thoughts
but those people, if it's only 1 or 2 or 3%, then chances are you get other investors who will buy them out. But also you don't have to wait that 5 years for the property to be sold. You can sell your units on the secondary market whenever you want to, right? So long as there's a buyer there to buy you out. Right?
Look, and at the end of the day, I can't prove it right now, but I'm very confident within a couple of years we'll have a lively and fully deep secondary market, because 9 out of 10 investors actually can't get real property. And also
agree.
here, even if you could get a real property, you'd never do this in any other asset class, put everything into one asset. So, why would you do it in property? You'd take, your 100 grand, 300 grand, you put it into 5 properties, 6 properties.
Yeah, I agree. And I think you think about the stock market. The stock market's been around for hundreds of years globally. It took hundreds of years for the technology to reach people.
I hope ours won't take that long.
Of course, because we have the benefit of technology, the internet, and everything else. So I think give it 3 or 4 years, and I think you're absolutely right. We'll have a very, very vibrant secondary market. Okay, now here's another question from Benjamin. Benjamin's saying, Arthur, you mentioned that next year leverage, Daniel mentioned this in previous, I think Benjamin's asked this a couple times in previous webinars. You mentioned that next year a leverage version will be available. How leveraged? What costs will be involved in that leverage? How will it work? And when is it expected to come online? Okay, so this is a great question for you, because I've held back answering questions on leverage. Now the man's here.
Okay, we've been working on trying to get leverage within Domacom because it makes a lot of sense for tax planning and the like. And I'm pleased to say, as of Monday last week, our new product disclosure statement has gone live, which allows for leverage.
Great.
So the next step is now to try find a lender. We've been working with 3. We've got term sheets for 2. And I can't identify them yet. And the rates are between 5.6 and 6.5. So depending on who you're dealing with and what it is.
So it's competitive.
Competitive.
Yeah.
Oh, and eventually we'll have a lot. Now the way it'll work is that basically. When our client, which is yourself, when you create a book build, you decide these book builds are leveraged and these ones aren't. Okay, so when you select the leverage, say that this book build is going to be leveraged, you'll get to choose a leverage provider. So that has agreed to the terms that Domacom and Perpetual have asked for them. And then having selected a leverage provider, you'd select the loan to value ratio. The constraint we have is that the loan to value ratio can be no more than 50%. Yeah. And the actual loan itself must be what's called positively geared. In other words, the rent from the underlying asset must exceed the loan repayment. Yeah. And the reason for this is that the actual loan is inside the sub-fund, not outside. So as unit holders, you don't have to borrow. The actual fund is borrowing and managing it all internally, which means there's no loan to value, there's no limited recourse borrowing, there's no loans to actual investors.
So this is very similar to CFD concept. Yeah. So if you're trading with CFDs, the loan's already built into the loan. So you're purchasing the instrument which already has debt attached to it or leverage attached to it. Similar thing here. So so as investors, you don't have to do any finance applications. There's nothing. You're simply it's like buying a leveraged ETF. Right? Think of TMV or the ones in America where there's already leverage built into it. You personally aren't responsible for that mortgage. You're just purchasing a unit in a fund or in this case a share in an exchange traded fund that has leverage built in. Now, the leverage can't exceed a point where there's a shortfall created due to negative gearing. There's not enough money to cover the mortgage. Because in that case, we'd have to go back to unit holders and constantly get them to top up money, right? So it can't do that at all. So therefore, a loan-to-value ratio of no more than 50%. To put that in context, a lot of investors who will to put down a 20% deposit and buy a property and borrow 80% from the bank, well, that gives them an 80% loan-to-value ratio. But you end up being shortfall because the rent never covers the mortgage. You have to then be in until the rents get higher in the future. So initially, the rent has to be able to cover the mortgage. So LVR no more than 50%. Look,
clearly, our product in every way is got to be rock solid. And clearly, we have the largest RE custodian. Well, they're very conservative, and that's why we've chosen Perpetual. Yeah. And at the end of the day, this none of us want anything that's going to blow up, and everything's going to be very well managed.
Yeah, fantastic. Yep. Okay, so and in time frame, you think
basically as I said, we've got term sheets. So all going well, we'll execute legal agreements with the lenders, it's nearly December now, so by the end of this year, the technology is currently being built, and we're hopeful that effectively we're just going to modify your book build to enable you to say leveraged or not. So then it'll be for you to create leveraged book builds for people who want leverage, and non-leveraged for people who don't. You'll have to find out what your clients want.
Sure. And then just to be clear on that, then what that means is if we're talking about one particular portfolio, right, there might be 3 properties in that portfolio, that if you purchase into that particular portfolio, then the units in that portfolio come with leverage attached. You don't have a choice of saying, oh, I want some leverage with that one, but none with, like, and other people have. No. Every single investor in that particular property portfolio has leverage attached. If you don't want leverage on your investments, then you come over to this property portfolio, where these particular properties over here do not have leverage attached. So it's kind of like looking at, again, exchange-traded funds. Some have leverage attached, some do not have leverage attached. You decide which one you want from that point of view. So that's what you're talking about.
Yep.
And you're leaving it to Doma Direct to identify the properties. And that's really where Doma Direct comes in. So our experience is investing. We've been investors for decades now. And it's not just me, of course. I've got a team of people around me as well. And all of us have 20, 30 years worth of not just stock market experience, but also I personally have a ton of 20 plus years of real estate experience. So we're using that experience to identify what we believe are the best, most appropriate, valued investment properties that we can find in the market to then bring to our Doma Direct investors, and we'll have a chance next year to have some with a leverage component, some without. Okay, let's keep moving. Yeah, here's a great question. Daniel, this is from Celine Moodley. He's asking, or she's asking, when was the property built, and will I be able to claim depreciation under the fractional system? So all the properties currently in the Doma Direct that we're offering in this property portfolio are new properties. So the question then is, how does depreciation work?
Okay, it works exactly like it does with any managed fund. So what happens is the depreciation is streamed through to investors via the annual tax statement as tax deferred and tax free. So effectively, that's what reduces your tax bill. So for the first, particularly, that's one of the reasons why people buy new properties, is that for the first few years of that new property, effectively the income is tax free.
Right, because you can claim the depreciation.
The depreciation on all the fittings and fixtures and carpets. Yeah. So exactly the same benefits you get owning it totally outright yourself. If I own 10% via Domacom, I get the depreciation benefits that pertain to 10%. So I get 10% of the rent, 10% of the tax-free distribution. Yeah. Right.
So the income that can then flows down to the investors via the net rent that's coming down, that's coming with the depreciation.
Yes. So what happens is that when a property is acquired, depreciation schedule is paid for, and that schedule effectively determines the rate at which all the fixtures and everything else are depreciated. And so during the year when we distribute income, it's all cash, exactly like a normal managed fund would be. But after the end of the financial year, when we do the annual tax returns for the fund, we then just give out to investors their annual tax statement, which basically said, okay, you received $10,000 in this year as part of your dividend or your rent, and 100% of that was tax deferred.
Right. So that you can then put that on your tax return to recognize that is tax deferred. So, so the short answer is the depreciation flows back down to the unit holders, and you'll get a statement from Domacom on a yearly basis, which you can then hand to your accountant, who will then include that in your tax return, so that the income that you're generating off that investment will be offset by the depreciation. The tax that you'd have to pay on the income is offset by the depreciation that you will receive in written form from Domacom.
Yes.
Fantastic. Okay, that's a great question. I know that's been a number of questions we've had coming through to the desk. Let's just quickly double check here. Any more questions? Okay, that looks like the last question. Oh, no, sorry, there's a few down the bottom here. For some reason, I'm getting slightly different orders here. So, when a tax account, this one's from Yi Kui Sun. When a tax accountant asks, "Do you own real estate?" do I reply, "I do," or do I reply that I own shares or something else? You
don't actually own real estate. You own units in a managed fund in a property trust.
Right. We can't say shares because
we're units.
They're not shares.
Yeah.
You have shares in companies. You have units in a managed fund or property subfund.
So actually, when you speak to your accountant, you just say you own units in a property trust. So we're a segregated property trust. I sort of made that word up because we're a property trust and we're segregated, then we're the first of its kind.
Great. Now, I just realized there's actually quite a lot of questions, so we'll start powering through these. Now, hello, how many units can you invest in one property or block of units? Well, as you know, of course, the minimum investment is approximately $2,000 per property. With our property portfolio, we have 3 properties in the portfolio, so it's $6,000 plus transactional costs, so $6,500. Now, in terms of how many can you buy total, you could buy the entire property if you wanted to buy all the units.
You can buy 100% of the units.
That's right. So in somewhere between $2,000 worth up to 100% of the value is what.
So that's where you may go to Daniel here, and there are reasons why you may wish to acquire a whole property, and but you can't do it through Domacom, obviously direct. But you go to Daniel here and
you go to Doma Direct.
Yes, and then
to go directly to Domacom.
Yes.
That's right. Hello, Arthur. What do you consider are the major risks, threats to your business model, to Domacom?
The main one is true of most companies, particularly startups and whatever. It's actually up until recently the risks were to do with the regulatory approval. The risk was will people like the model, etc. We've gone past most of those, and it's really now all about execution. And part of that is it's really the funding. The funding's the hardest thing. Having done this twice now, two startups and listed the first, and clearly I intend to list the second. And I'm pleased to say that a bit of luck and a lot of hard work and everything else, we've got a lot of the funding, and so that's really one of the hardest risks. Now, from an external risk perspective, clearly you'd say regulatory risk is high, but we're in a situation where the law's just changed a lot. FOFA and everything else has just gone through, and it's unlikely, the future financial financial services inquiry. So I don't see much in the horizon that poses a regulatory risk to Domacom. There are some people said the competing risk of the crowdsourced equity funding legislation that's probably going to come in this year. That'll enable people to go in and create, one of these little mini crowdfunding sites. The difference between them is very much, and I only clicked on this when I presented with the crowdfunders at the Property Council of Australia breakfast, is that Domacom is unique, I think, globally in that we are paid for by investors. Everyone else is paid for just by the property developer, so they can only do developments. Now, you're a real estate agent, an online real estate agent, is your Doma Direct is, but you're using a platform that's we're paid for by the investor. So that's a big difference. So I'm not really fussed too much about the direct crowdfunders, and there'll be lots of them about, and you'll be able to use them.
And they don't have the regulation, they don't have the secondary market facility, they don't have all the stuff that you've worked so hard to get. So again, I think a lot of them will, and they can't promote to the retail market space.
But eventually they will. When they get the crowdsourced equity funding, they'll be able to, with a lot of constraints. But the problem is, even if you do, we're getting asked about secondary market and all that. It's a good thing to be able to get in, but you've got to figure out how you get out. And going into something, we've already got 35 what's called dealer groups, which is 5.5% of the market coming on, right? And so, we hope to be one of the platforms, and there'll only be a handful of them, which will have sufficient scale to give you all of this.
Yeah.
Now, we're first movers, several years head start from everyone else, but,
Yeah, so, and a public float raising $30-40 million, that would give you the impetus to...
It's really funny, though. Some people say, the property market crash, that would be, high risk for Domacom. Quite the opposite.
No, property market crash.
That would be great because, it's...
Bring it on.
Yeah. What concerns more people is the talk of a crash than the actual crash itself. And the reality is that even when we've had a crash, like it was just the Gold Coast, it wasn't all of Australia. So that's the whole idea with Domacom, is that you won't pick all winners. right? And if you put just one property, right, the chance is that some of you will be the loser, right?
Yeah.
But if you take that 100 grand, 200 grand, spread it across 6 or 7 properties across Melbourne, Sydney, Brisbane, or wherever, across resi, commercial, industrial, there you go. You're not going to. What's the chance of this?
Yeah, exactly.
It's great. So that's really what people need to do.
In a country that has a active immigration, growing population. Urbanized, all those reasons.
So, well, just to finish on that one. So the real risk here is getting you to use us. It's really just execution.
It's just educate. We get 23 million Australians to educate about fractional property. That's
why we're going to use a little bit of our raising now to start doing some direct to investor or consumer marketing. But really, the next one where we're going to raise 50 or 60 million, because we want radio, TV, we want
Doma Direct to be household names
everywhere, and
right.
Then gives everyone the confidence that this is it. This is the true market.
That's the way to do it. That's right. Okay, Eric is asking, Daniel, my son would like to invest in Doma Direct through the property portfolio, but he's not a Tradability Trading Pursuits client. Can he still invest? Absolutely. All right. We've offered this service through Doma Direct. We've offered it to Trading Pursuit clients first. And as you know, we have a $197 application fee to sort of set up your account and get it going, because there's a lot of administration involved in doing that. We're waiving that for Trading Pursuit clients and friends or family of Trading Pursuits. So I'll be clear on that, right? So if you have friends, if you have family, anybody you know who want to open up an account, do it now. On December 1st, so a couple of weeks from now. They can still do it after then, but there will be a $197 fee just to set up the account on top of the $6,500. So great opportunity to set up that account now. And yes, if we're fine. You don't have to be a Trading Pursuit client to have access to this. We are going to make this public to all Australians as of next year. But for friends and family of Trading Pursuit clients, by all means, you can come and join now. What can I do if friends, family who are interested in investing do they? Oh, I think it's the exact same question. So yes, absolutely. Friends and family of Trading Pursuit clients, you're welcome to join right now as well. Do it before December 1st, and we'll waive that entry fee. Hello, are there only units? Does Body Corporate have any bearing on this return? Okay, in terms of I'll answer that one, because the properties may or may not be involved in a body corporate structure. The 3 properties that are in the first property portfolio, the Waitara, Westmead, and Kellyville properties, they are in strata title. They do have a body corporate. They're quite low body corporates because we specifically choose smaller buildings that don't have big giant high-rise elevators and big pools and everything else. So there's an order to keep the body corporate fees down. But that is paid for by the property managers out of the rent, of course, out of the rent. So that's allowed for, and that's included in the outgoings. If you go to the Doma Direct website and have a look at the different properties, you'll see there's outgoings, and that's allowing for the property management fee and for the body corporate fee. So that's all worked in. Then you end up with there's the Domacom yearly fee, and then there's the net yield. And that is a positive net yield, because we cannot be allowed to get in a proper position where the property is negatively geared or there's a shortfall. So it's important that the properties are positive cash earners for you. So when you invest your money, you'll have a net income even after all the things are taken care of: body corporate, property management, etc. Okay, I think we're back to the questions we had before. Yep. Okay, I'll just quickly refresh this, see if there's any more questions. Otherwise, we'll finish it up. It's just refreshing here. Okay, we had all that question before. So for some reason, it's asking me questions. Yeah, that's it. We've answered all the questions. Fantastic. Okay, everybody, that's just over an hour, so that's been a great time. Thank you very much for your time today, Arthur.
Thank you, Daniel, and thank you.
Yeah, it's been an absolute pleasure. I mean, you can see my enthusiasm for this. I know that when I first met Arthur, the moment I heard about Domacom, I was instantly excited, because I think it's such a groundbreaking new concept for so many people to have an opportunity. You guys know me. I'm all about educating and involving people in the financial markets, because only through involvement of actually putting your money on the line, getting into the market, that's the only way to learn And when you learn, you can then be a much more productive member of society. You have an understanding of what's going on in finance. And my vision and goal would be to teach everybody in the world how to understand finance. So when I saw this opportunity, I could not stop myself from becoming involved and setting up Doma Direct with my team. So it's been an absolute pleasure. Yes,
just one more observation. One of the questions I get asked for is, where did you copy the idea from? And we didn't. This is developed in Australia.
Absolutely.
And that's the thing, is that we have the world's 4th largest pension market, Bugger,
it's amazing.
We can,
23 million people.
We have enough capacity to build products like this here.
Yeah.
So yeah.
Yeah, well, absolute power to you, Arthur. Like I said, when I first saw it, I thought this is amazing. So I've now worked with Arthur for close to a year, and by far one of the most professional, hardworking visionaries, and a true representative of the Australian financial market.
I'll give you the money later.
Yeah, that's all right. No, it's my pleasure. I wouldn't throw myself behind Doma Direct so hard if I wasn't convinced that this gentleman knew exactly what he was doing and was taking this to fantastic heights. So thank you very much for your participation tonight. And for your questions. I hope we answered them all for you. If you've got any more questions, please don't hesitate. I'll throw the thing up. info@domadirect.com is the email, or just go to the website, domadirect.com, and their phone number is right there. Thank you very much for your attention tonight. Now, next Monday, we'll be doing another webinar, again with me, but also we're preparing some more information content you'll see come up on the website, and we'll be emailing out to clients as well. So again, keep an eye on us. As you know, this is early days. We're just getting it going. It's going to be very exciting. Thank you very much for participation. Make sure you've opened your account too. Like I say, at December 1st comes the $197 charge for opening up accounts. So we're waiving that until then. Get your friends, family involved. It'd be great to have you. Thank you very much. May we wish you all profitable investing. Good night.